Peter Cardillo, Chief Market Economist at Spartan Capital Securities, is joining us on the show right now. Peter, thanks very much for taking out the time. I'm trying to gauge, from you, there was a big push or a big hue and cry about the Fed having to step in a big way, about the government doing something big. They did it. The Fed came in with an emergency cut, bringing rates back to levels that were not seen since 2015. National emergency being declared so that packages can be put to use faster without going through the entire approval route. So why is this nervousness in the market?
Well, look, the Fed took a giant step today, and they basically, took interest rates down to zero. And the big thing is that we're back with QE, and that suggests that the Fed is really worrying about the state of the economy or the future state of the economy. The fact that the coronavirus is now really beginning to impact throughout the United States is very worrisome. And I suspect that this huge, massive QE that they're going to start with just is preparing the markets for a huge spike in layoffs in the coming weeks. And that means that we're probably already in a recession. Now, the question is, how deep and how long will this recession be? That all depends on the spread of the coronavirus and how long it will take to reach a peak in infected individuals. But remember that we're just beginning here in the States.
Yeah, that's the problem. That's the problem. Peter, you're right. So the question, Peter, then is this unpredictable? And therefore, any bets on whether the valuation comfort comes in or no, are they off the table for the time being?
Well, let me put it this way. Last Friday we had a huge rally, but it looks as though today we're going to give it all back. And so obviously we're now in a bear market. The Dow is in a bear market. Last Thursday, the S&P entered a bear market. And so this means that we're probably going to stay in a bear market. But I think that the volatility should begin to calm down. Now, when I say volatility calm down, I mean, we could see down days, but certainly not like we experienced last week or possibly what we're going to experience today. So I just think that the total volatility is probably going to calm down. So the markets already have lost over 20%, 21, 22%. I don't think we go much beyond 25%. And I think that, the fact that they will the fact that they are beginning with quantitative easing, that should put a floor somewhere very soon in the stock market.